All right, cyber traders, we are back for another fantastic edition of our Traders Talk workshop this Tuesday morning, February 13th. Happy pre-Valentine's Day to all the ladies of our live trading room joining us here. Great to see the men as well, perhaps, but great to see all of our students and members all together. Grant, Alex, Andrea, Charlene, Lawrence, Charles, Eric, Martin, Corinne, got Linda, Margaret joining us both, and all of our students and members alike. Great to see you all there. Great to have all of us back on social media. Otherwise, at Cyber Trading U is the name, is the handle. We'll post that there on the bottom left of the stream. Just make sure to follow and subscribe, namely to all of our social media streams alike, but specifically our YouTube channel. That's where we're going live each and every morning, each and every day. That being at Cyber Trading U. For anyone unfamiliar with myself, my name is Josh Levitan. I'm Fausto's senior instructor here with Cyber Trading University. Been with him for nearly 10 years. And well, I'll tell you what, really, I mean, just yesterday alone was one of the crazier trading days that I've been a part of with him really since the get-go. And, for a Monday, you can't really expect that. Great to see Irving, one of our students actually here joining us on YouTube this morning. Irving S. from Cincinnati. Great to have you here, Irving. And normally we'll catch you in our trading room, right? So, hey, not to Irving, but to anyone else joining on YouTube, if you wanted to tag along with our students, myself and Fausto, inside our live trading room, just scan that QR code on the top left of the stream, get you a week-long trial to our live trading room. There we go, Mark. Mark says, thanks for the heads up, Josh, on Valentine's Day. No problem, Mark. I got you. I got you. We got to get our last second roses delivered, right? Oh, Jill, there we go. So a couple fellow students from the Cincinnati area joining us. So Irving, you got to join us back in the cyber group. One of our students, Jill, is also from Cincinnati. There we go. All right. So with that said, at least, hey, yesterday was one of the crazier trading days that I've been a part of from the jump, from the get-go since 2014. Why? Well, normally we don't expect as much to happen on a Monday, given what had happened last week, given the hollow stock or, Halo hollow. The stock broke out 2,000% just last week. We had a couple others, I think. SYRA was another one. Here's the thing. You can't hold your breath waiting for this, but once we get one crazy stock up 1,000, 2,000%, some ungodly amount, you're probably going to get a few more out there over time. That's why it pays to be inside our trading room with myself, of course, Fausto, Rich as well. We're navigating the ship. A lot of these are pop and drop stocks where honestly, a lot of them, we kind of move forward from them once we see them fail to hold support, once we see them fail to make a higher high, because we know what the end of the story is going to be. I mean, obviously, look what happened here. And obviously, look what happened on Hollow, at least after the first couple of days. Today, making a second win type of move. But that's where I say yesterday. Oh my God, between the BMR trade, MGIH, just it's like next stock up. It's like a royal rumble of stocks that are just popping one after another. And of course, with this really being the lead horse from yesterday, we'll have the chance to cover this BMR, namely here for the morning. So this BMR yesterday, hey, really quick, if you're just joining us for the first time on YouTube, I want to let you know, of course, it's very easy to tell you what happened to a stock. It's easy to tell you, what a painted picture already looks like, right? But here in Traders Talk, we go through the same motions here in this workshop each and every week in our main curriculum, phases 1, 2, and 3, each and every month, and each and every day, honestly, inside our trading room, right? It's a little bit harder to teach and trade at the same time. Here, we have a bit more of an opportunity to break down the X's and O's. So this stock popped from basically like 2-ish up to 440-ish. All right, well, really quick for, Sam or Jill or Phil or Grant, any of our students here, namely phase 1 students, where are we more likely to find the iceberg orders? When we're talking about level 3 and then on top of that, level 4, what common set of price levels just from the jump are we likely to find these big iceberg orders at? Right away, Mark saying 50-cent levels, whole numbers. Of course, right there. So, you could just simply say at $4, well, whole number level, it popped up there and it had a tough time trying to break over it, right? A couple nasty shakes. Well, this is where we go back to the whole part of, well, false breakouts can be your friends in terms of, well, the fact that it pierced above $4, not just once, not just twice, like a few times. Well, we're repetitively seeing buying interest off of that level. Now, could there be another level right above it that was the stronger resistance, that was the stronger price to watch acting as the top? Yeah, absolutely. Absolutely. We'll take a look in just a moment. But in terms of just the whole process of what happens if history could repeat itself, I'm not asking that question in relation to these, false breakouts. I'm asking it in relation to the buying. So the more and more buying that we're seeing coming into this trade off of $4, we are more likely to see this make that reaction, not just a big move, but hopefully, of course, with that in mind, a big move going up. So easy to say that's what happened here in pre-market. I did not jump in on this from $4. It was off of the highs there, and it was a different level. It was like 420-ish to 430-ish. I think it was the combination of those two prices that became a pretty strong level to watch from yesterday. This is all from yesterday pre-market. This stock ended up making a move all the way up to as high as like $35, $33. There is so much of this stock that we need to recap. So, let's actually just show you Bookmap. We'll show you what the level 4 looked like here at the time. Trust me, if I knew this stock was going to 35 yesterday, I would have been holding on. Would have been holding on for my initial trade in pre-market. So it was more from after 8 o'clock. You could see that this is the heat map program that we're using. Now, notice what we have here over time. After 8:15, 8:30 Eastern, two things pop up. We have a 41,000 share iceberg order on the buy side. That's a big one, and that's at 360. Well, otherwise, we do have some resistance, which is pretty much near the top from earlier, near the first peak that we had in pre-market, and that was off of 420-ish, right? So I was using 430, 420, the combination of them both. But the more times in which this presses up higher, you're expecting that breakout. You're expecting that pop. So I ended up doing this right off of 420, 430 area, and easy to say. Obviously, it ended up moving up higher. But it goes back to what we saw from the pre-market. It goes back to the fact that, hey, it didn't just round off under $4. It didn't just go up to 398 and then fall off. This thing pierced over $4, not just once, not just twice, like 4 times across the pre-market morning. So it's not a matter of if, you'd like to think it's a matter of when, right? Now, hey, actually, really quick, we're going to jump back to BMR. Again, this stock we're going to recap from head to toe. But that whole pattern of, what happens if history could repeat itself? Well, let's go back in a time machine 7 days ago, because I'm pretty certain on PLTR, if you recall, coming off earnings last week, did the stock not make the exact same setup for us in the pre-market hours? Did the stock not make the exact same move over and over and over off of that? I think it was the 20 level. Maybe it was 21. So here's your after hours breakout there, right? Yeah, it was this for the most part. What happens the more and more we keep seeing a resistance getting poked at and tested? Well, this was even from the after hours that night before. Well, the more times it poked it obviously led to that larger reaction. This is exactly what we talked about 7 days ago on a much more well-known company, PLTR. Folks, same rules apply to this trade. The more times it presses it in a shorter concentration, we would like to think that we're going to get that more reactionary move. Can there be a false breakout that you jump in on and you get stopped out, or here in pre-market, you just take the quick limit exit? Yeah, possibly. Right place, wrong time. It happens. Happens to the best of us. Trust me. But otherwise, over time, that's where I say to myself, I feel a lot more confident with the entry I take if the stock is already testing resistance a lot of times in a smaller concentration. So that's what I felt at $4. And once it really broke 420, 430, I said, okay, this thing should be off and running. Obviously, that's what happened. But on this trade, if you could walk out with 70, 80 cents on this trade, a dollar, especially in pre-market, folks, on 1,000 shares, that's enough money to keep us satisfied, right? I mean, if you're someone already locking in 5K a day, that's obviously different. That will help you towards that goal. But here's pre-market. This is all before the market's even opening up. To be satisfied with 70 cents, 80 cents, hell, even 50 cents to even undercut it more, on 1,000 shares. That is such a sweet profit to have. So trust me, if we had this magic crystal ball to tell you, oh yeah, BMR is going to keep pumping up all the way to damn near 35, none of us would be here, myself, Fausto included, right? That's where we say, even dating back to last week on Hollow, we're not trying to get all of the meat off the bone. We're trying to get enough meat off the bone to satisfy us, to make us full at the end of the meal. But what happens is when you get too greedy and you try and hold on too long, well, of course, you absolve all of that unrealized profit. You wash it all away, basically. And then, of course, if you're looking away, you don't have your stop set, that's a whole separate conversation. But big trees fall hard, right? So of course, same thing happens here on BMR today. Ended up shaking back down over time. But let's go back to this trade at least and kind of recap or finish up the recap that we had from yesterday. So, of course, it keeps pushing up prior to the market opening. And hey, really at 9:10 in the morning, 9:15 in the morning, you typically want to say, okay, let's take a step back. Let's just give the stock a chance to breathe and relax. Let's give ourselves a chance to breathe and relax, right? Every week we say this here. So really by 9:10, 9:15, you should be out for that reason alone. Well, by the time the market opens up, obviously it pops, it pulls back. This thing is like all over the map really for the first 30 minutes, right? It's already up so much percentage-wise where you're thinking, okay, well, not only could this just be the end of the run here on the first breakout, but the more that this is consolidating, there's plenty of other trades that are moving a lot better, right? I mean, hey, don't forget about CLSK. Don't forget about Mara, even PLTR. We did really well yesterday, not just on this stock. There were plenty of others that were moving as this was just dead, as this was just flat, right? But what we had on this trade, if I could bring back Bookmap here, let me show you what the heat map looked like now here at this point, right before the opening bell. Right when the market opened up, we have our opening bell print right here at 608, which is pretty much where it broke out from off the pre-market highs. That could be potential support on a pullback, but that's not really my first thought because you're catching a falling knife in that regard. So I'm looking more for continuation. I'm looking more for a pop, a breakout, and over time, just to keep a long story short, I had my eyes right around here. It was really from the chart at like 760-ish, 750-ish with this iceberg order that, really started off at 8 and moved lower in price. I turned my head for 1 second, literally just maybe 20 seconds if we're being exact. And I come back and this thing's already getting halted right here. I was so upset with myself. I hate to say it, like just popped. It got halted right away. I wanted the pullback down to this price by the time it reopened up, and it just popped up another $3 higher. It's like, come on, you're not trying to chase it and just jump in at the top, obviously. But folks, it goes to show that we're not always going to be there at the right time. You might have the right place. You might have the answer to the question of where is the right place, but you might not be there at the right time. And if you're not, you're either looking for a pullback to test this support or this thing's off and running without you. And that is what happened to me. Now, here's the learning lesson from this, though. I mean, the more it goes up, you don't want to chase and jump in. So I didn't chase this and jump in. I didn't take this at all at this point. It's a shame. But it leads you to ask, well, if this could happen here, and it already happened just, Friday last week on Hollow, well, let's keep looking. Maybe there's going to be another crazy stock out there. Maybe there's another stock that's up, maybe 40, 50, 60% already and is going to break out to be that 200, 500% gainer. That was my thought. That was my line of thinking there at that point. Well, the time was 10 o'clock. So I'm moving on throughout my day. And that leads me to this trade here, MGIH. So I had the thought of what if we could see another pop like that over time, and here we ended up getting it. It's a very similar pattern too, actually, where it just laid flat for a long time. I just got off a coaching call with one of our students going over this, and it was a great level here at 420-ish. Just this purple line. It was holding really clean as resistance. I don't know if there was an iceberg order there. Going back, trying to recall it, I don't even think there was. It's just a pretty clean chart level. Well, it goes to show it's a pretty clean one because it's holding right under it for a good period of time. Well, I turn my head and I come back, and this thing's already popping $4.20. And I say to myself, there's no way this is going to move without me, right? I'm looking for a pullback. It's not giving it to me. So what I do in this trade was I ended up taking the trade off the next level, and that was at $5. So this could be easy to tell you, given already looking at this painted picture. Of course, it broke out higher. It's a good ending to the story, right? Well, again, if we were to take every trade that looked like this, we're not going to be killing it because there's a lot of false breakouts that we encounter. So again, this ended up working out, but how did this work out is the key. Well, it ended up moving right on up towards 5 here in the morning, but notice it did not break over. It did not touch it. So there's actually zero buying interest at $5 by the time it's coming to this price here. So what happens? Well, I'm going to just show this to you here because I just showed it to my student before. I did not use this microscopic 15-second chart when I was trading this yesterday. There's no time to do that. And I'm not focused on such a small time frame when I'm trading. But it is just to show this to you here in terms of just an educational example here. The actual first test of 5, it did not make a clean breakout. This is about 45 seconds worth of time here to 1 minute worth of time, right? So it's really not long. It's not a long amount of time, but it's not like it just blasted 5 and that was it. There was a small struggle. So with this already running off of my first level I had there at 420, to me, there's a difference between chasing and being late to the party. Chasing is a lot more reckless. You're just jumping in to jump in. You're throwing a dart on the wall, hoping it lands. This is more taking it off of where the next big level is. Now, that doesn't mean that, it's going to continue. We got to make sure this stock is showing good buying interest off the level prior to our entry, meaning that I want to see this nip this level a couple of instances before I look to take the trade at least, right? The more times the stock is testing a level in a shorter time frame, that's where I feel a lot more bullish. So here, again, easy to say it worked out, but I missed it from 420 at first. I missed the other trade, and I actually used that other trade, the BMR, the one I missed at first, to say, you know what? All right, well, we might have other stocks that can make this type of move. So I'm not just going to chase that one stock. Let's just see if there's a move elsewhere. So that's what happened here. Ended up breaking over 5. And then, of course, obviously, it ended up making a really sharp run up. But that goes to say, if you have a clean entry on the trade, I'm not just trying to get out just to get out. I'm not just trying to get out at pick a price, any random price. But if this stock is popping and I'm up $1 within 1 or 2 minutes time, and I think that there's a chance for this to become the next BMR stock, then I'm just going to look to scale out accordingly. If I'm up an amount that I'm not normally up, I'll be in the interest of just trying to take the profit sooner, right? You don't need to take all of your profit in one shot. You could scale out in thirds and quarters and halves. Over time, though, what happens was that this ended up making a push up to 9. The more this pops up, you got to expect for it to drop, right? So that's kind of what happened here. It got halted on the way up. It reopened up and popped even more. And I got out just, it was somewhere under 9. It was like 870-ish, 880-ish. Just at that point, I was like, get out. Just hit the eject button. If you're in from 5 or 5-ish and you're up that much, there's no science behind it. Just take the money and get out. Now, a very similar trade happened this morning, DBGI, right? So again, we're not trying to fall in love with each of these trades day over day. They're all just flavor of the day type deals. Pop and drops, and that's it. You move on from it afterwards. So BMR, it ended up providing a little push in pre-market. We were focused on it again there, but look at it now, right? Look at it now. So that leaves us to say DBG high. Well, the same thing could have happened here in pre-market alone, meaning like this could have dumped off going into the market open. It could have just completely broken lower lows, and that was that. This could have just been a pre-market one and done type of deal. This trade is a little different. I'm just giving you my thought process behind this. So this is a very illiquid stock. Notice the order book live right now. Big spread, not many orders on the buy and sell side. So here in pre-market and even after the market opened up, we weren't able to see much. There wasn't much out there that I could use and say, okay, this is a really clean level. There was one level, but it was resistance. It dumped off here at the open. So, that being at $9. But that's where, for as much as this stock pumped up in pre-market here, it went from bottom, where my cursor is, basically bottom, to top. I said to myself, I'm like, you know what? Let's actually break out Mr. Fibonacci here. Let's break out Mr. Fibonacci here, right? I don't do this often. I really don't like to use Fibonacci's often. But what's interesting is that, we have basically these three lines I'll show, the two yellow, then the gray in between. It's the 61.8, the 50%, and then the 38.2. Those three typically are going to be stronger fib levels to watch, all right? Now follow me here. This isn't the first time I just put this fib up. Show something else coming up as well, but if you see the darker blue lines on this graph, the darker blue, those are the same fib levels. The 38.2, 50%, 61.8. Why is that interesting? It just shows that this bottomed out so cleanly at the 61.8. Bottomed out perfectly. Did I jump in? No, I did not jump in. I mean, this was right at the market open, so that's crazy. We're not just jumping in on minute number one. And then as it's dropping off here, it's making lower highs. It's dropping back down again. I was kind of expecting here to catch a lower low. I'm just showing this because, well, it's good education. It shows that at least those prices, held throughout the morning. All right. Well, over time, this stock eventually broke out. It eventually broke resistance and flew. Well, we'll continue into this trade over time. I just want to show Bookmap actually here first. The stock did not have really good levels throughout pre-market, like I said, but there was one level that I was kind of more of a fan of. It was this area here between $9 and $9.20. Where my cursor is here on the far right side of my Bookmap, the delta column. If you just see where my volume kind of tops off here at the CVP and the delta in green, these two price areas here create resistance. It's at $9 and it's at $9.20. Like if I were to zoom in, you'd get those exact prices. $9, $9.20, right? Delete my fib lines here now. You could see that I had these two as resistance lines going into the open. And the more times it is going to test this area in a shorter time frame, I'd like to think that we can get our more conclusive reaction, our more decisive move. I honestly don't like this stock. We've traded this stock before here at CTU. This is traditionally a really bad day trade even. Like this stock has dumped off for years and years and years. And on days where it's come out with news, it's never really maintained a consistent trend. It's just a quick pop and drop, and that's it. I think this stock recently had a reverse stock split as well, which doesn't do it much justice when it comes to liquidity. It thins it out a lot more. So this is a pretty volatile stock, more or less, is where I'm getting to, where you got to lower your share size on this trade, even with it being at $8 or $9 or $10. So this I did on 300 shares. It broke over 920-ish, this area. I jumped in. I think it was even on this green candle, just as it's kind of poking it. The more times in a smaller concentration, that's where I feel more apropos to take the entry. Now, hey, it popped and it made a pretty good move shortly after. Easy to say. Where's the top? Where do we have resistance? Well, let's look at Bookmap first. Let's see. Was there any clear resistance here? Any clear? Well, at $10, about 17, 18,000. Above that, maybe here. It's not an orange line, but it looks like about 10,000 shares were there at 1222, 1221. Hey, that could be a target. That could be a price to watch. It really could be. I was more abstractly just looking for the orange and red lines, so I didn't really even see that in the moment. That could have been a price to watch there. Here's what I did though, and I don't do this often. Just like I said with my Fibonacci retracement line, I don't use this often, even less frequent than retracements, but fib extension. Watch what I'm about to do here. Check this out. I went from the same bottom and top that I started the retracement off with. Watch what I'm about to do here. Draw the next bottom pretty much off this low. Now, if you look in the trading room, folks, look inside the Cyber Group trading room really quickly. And I'm going to try and post this on social media, just on our YouTube channel coming up as well. But you can see over time that this ended up topping off pretty much right there. It was at the 100% line here. It's the Fibonacci extension. It's an indicator. I don't use these often at all. But here, where a stock is making a crazy run up and up and up and up and up and up and up, well, I'm thinking, where could we find potential resistance? I told you, I had this set at 1270-ish at the time, pretty much right there. I said DBGI, potential resistance around 1270. I gave that to you at 1028 in the morning. Look at that, at 1028. It wasn't there yet. It was about to approach it. And as soon as it did, it topped off pretty much at that line, made a big move shortly after, right? So that's simply to say, that's your top, that's your area to take the profit, at least, if not from earlier. Of course, if you're in from $9 and get out at $9.80, $10, that's a pretty healthy profit to start with, right? So, for anyone that ended up getting in and out pretty quickly and make that 50, 70, 80 cent profit, congratulations. That's a sweet trade, right? Now, really quickly as well, for Sam, Jill, Grant, Margaret, all of our students here, what time normally do we expect reversals at? What time of the day normally? This one couldn't be any sweeter, right? Because my answer. It's always 10:15 to 10:30. That will always be my answer, right? Because you got to give a generalized roundabout answer for that. It's not as if at 10:30 every morning the market makers are looking at their clocks. They all bought the cyber clock right from our homepage, and they're like, "Oh, it's the 10:30 Fausto Pugliese." No, come on. You know what I mean? It's not like they're doing that. But this couldn't be any sweeter where it's like on the nose, 10:30 in the morning. Oh my God. So obviously that's where we say you don't want to hold on any longer than you should, than you need to. If you got out earlier than that time or at that price, you made a pretty intelligent decision because you can never go broke taking a profit, right? Now, I had a question that came in from chat, but there were a bunch that came in from email before that. So to my trial member here, Tim, I'm going to get to him. He had asked, what was the trigger to get into DBGI? How about this? I'm going to do this for Phil, Grant, and Eric, and Barbara, and Mark, all my students that have been with me for a little while. I want you to answer this for me. I'm going to do this for you, please. What are my best entries to buy a stock? To buy really any trade that we're calling out, what is my ideal setup to buy a stock. My best entries to buy a stock are directly after what? Directly after it breaks through a big level on the way up. So the question that we ask is, what is a big level? Like, what makes it a big level? Just because you see a high of the day does not mean that that is a big level. So that's where we take a lot more time to go through that process in class. We do it here in Traders Talk, but this is more like a little band-aid to, kind of patch things up for you compared to going through the whole X's and O's of our curriculum. But ideally, you want to focus on a stock that's, pardon me, not just trending up, but ideally shows a prominent level, whether it be from the chart, whether it be from the order book. So if it's just right there, the writing's on the wall, and you know that that price level is a significant support, significant resistance to keep an eye on for the day, well, from that point, we would want to see the stock break through that big level on the way up, on the way upward. So could that mean simply a breakout? 100%. That's what happened here. As soon as this ended up re-breaking over this big area, this big level, it led to a better run, right? So, of course, I need to mention once again, we will encounter false breakouts. Right place, wrong time. There is no 100% cure for that, folks. I hate to be the bearer of bad news to anyone trying to find that 100% cure for that. There is zero. So, you'll still be there, right place, wrong time on occasion. Now, what I focus on that gives me more confidence to take a trade at a certain time compared to another time, the more times it tests that level in a shorter concentration. Think about that. Now, let's say if it's like 30, 40 minutes in between level tests and the stock just breaks over a level right away and flies. I'm probably not going to be as jumpy to take that trade. I'm probably expecting a little turbulence at first. So we're not always going to be perfect with knowing when it's the absolute right time, because there could be times where we're maybe a little too cautious, or not even too. Maybe we are just cautious enough and the stock is just defying the odds. It's defying what we expect to see happen. All right, well, hey, let me ask us, when a stock smashes above resistance and it flies off of resistance, we would like to think that initially that resistance could become what? Absolutely, support. So, does it stink to miss out on the breakout and the run if you miss it? Of course, especially the more it goes up without you. You think I was happy about missing BMR yesterday? Oh my God, when that popped without me, I had the where place, or I had the where correct, time and price, right? I had the price correct, just I ended up missing it from that 770-ish area right here. So the more it goes up without you, it's definitely a shame. It stings. It happens to all of us. I know that I'm not always going to be on point with every trade because, hey, for the stock that I'm watching here, there might be another stock that's breaking out that's on my scanner that I'm not watching at the given point in time, right? So that's just something as a new trader or new student of CTU, even if you have a wealth of experience as a trader, this is something simply that we need to accept and just move on with. Really. Because the more that we get caught up in our feelings about it, we're either going to just sour our day, or we're not going to really focus as much on the strategy part of it. And maybe we'll just take a trade based off emotion down the line, right? So we do need to get over it for that reason. But then it's also for the sake of saying that there's other trades out there, right? So we got to do our best to focus on levels, trends. Maybe there's another one that could make a pop, right? That's kind of the thought process. All right, so really quick here as I catch up on chat, take a little water break for right now. I want to make sure I just catch up on all emails and questions here. All right, so I'll tell you, I had an email, or I thought I was going to get an email from a trader yesterday. I had mentioned to them directly, "Hey, email me for Traders Talk, and I'll have the chance to cover your questions there." I didn't get their email, their questions. So this goes across the board to any one of us on YouTube, even, or just namely inside our trading room. If you have questions, please send it over like as soon as possible, at least the morning of the day of that we do this workshop, because this is really the best outlet for us to go over any questions that you got, trades that you want to go over. Here's one from Lee. Lee had sent this one just from this morning, and it's a good one. He says, under what circumstances should we consider averaging down in a stock trade? Averaging down. So my first question to Lee's question here would be, well, how many shares are we trading? Is this the normal amount of shares that we trade per position? Meaning, for example, like let's just say, I don't know, let's say CLSK. Okay, hey, CLSK right now. It's actually breaking above a level that I have plotted on my chart. I actually had a freaking awesome short on this trade earlier today, right from that price. It was a phenomenal move. But right now it's pushing back over it. Okay. Well, let's say if we were to jump in right here, where my cursor is, how many shares are we normally trading on this? Is it, 500? Is it 1,000? Whatever your normal size is. I'm not in the business of averaging down to like double my full size position. Like if your full size is 500 shares and you jump in and then the stock tanks, I really don't like averaging down with a full size position. Um, I mean, of course, you would need to if you're trying to literally average your entry price lower. Um, but in terms of, I will do that a lot more frequently if it's not a full size position. Like if I'm trading crazy stock DBGI, and if honestly, that was a pretty swift entry off of $9 from earlier today. But otherwise, it's to say once it ended up popping over that resistance, and let's say if it was a mess, let's say it shook under $9 and was moving around. Well, I did this on 300 shares, not 1,000, right? For the price of this stock, I can get away with 1,000. It's a $9 stock. It doesn't break the bank for me. All right, well, price aside, this is on a crazy spread. It's on a crazy order book, making big move. I'm not as comfortable doing 1,000 shares for that type of stock. So if I know I'm lowering my position here to accommodate for the volatility, well, in the event where it slams down, I don't feel as guilty, as bad. It's not as much of a negative connotation to make that average down if it's on smaller size. Hey, if you're just doing it on 100 shares, right? You could do that with the attempt of it trying to bounce back up, and then from there scale out, break even again, and then go back to the original size that you had. You know what I mean? Like, let's say if you did 100 shares at 920 ish, it slams down bad. Like, ah, shit. All right, well, let me just average down. It's not a big size here, at least. Okay, well, if it moves back up and you're basically break even or even like net positive again, then definitely take that portion that you average down on out and just go back to your original share size with that. So that's kind of the advice I give there, Lee. It's not really a circumstance as much because I truthfully don't like averaging down, because averaging down means that you're really managing your trade not in a well way to the point where you're up or to the point where you're break even, right? Like for me, if I'm down on a position 4 or 5 pennies, there's not much of a reason to average down. It's kind of more just like, okay, it's not working out, just get out, right? So, let's say, hypothetically speaking, well, guess what? Resistance initially became support. It fell into this as support on this wick, and it tried to make a move off of it. Okay, well, let's say you didn't really watch that there and you're expecting this to be support. If you take the trade under then over, and it's instantly dropping back down again, to me, there's not much of a need or a circumstance that you should consider averaging down. It's more just like, get out. Like, this isn't the right move. You know what I mean? So it's kind of like a last resort thing if I'm trading smaller size. I guess that's the way I could phrase it there, Lee. Now, even furthermore, averaging up could be risky because you're, of course, increasing your average cost price with it. But at least if you're averaging up, I'm assuming that you're going with positive momentum, good direction as the stock is hopefully continuing to move upwards towards a target that you have in mind. But that's a little bit different, at least that Fausto could share with you more in the phase 3 class. All right, give me a quick moment here. Just reading up on one or two separate emails here. Just had an email from a student. Just want to make sure I'm reading it correctly. Okay, so I'm just basically gonna reiterate the email that was sent in just before. It's two separate emails, so I think I misread it at first. So, question just from one of my students here regarding um, just stops in general and on options trades, we'll say. So for my student, they said in one of the classes that they were taking yesterday, we were looking at Mara. So keep in mind, just to kind of specify, I'm not trying to nitpick. These broadcasts that we do in the morning and afternoon, they're not classes. It's not part of the gold stock course. It's not phase 1, phase 2 class, the phase 3 stock class that we have every month. Those are classes. I need to let you know. What we do in the mornings and the afternoons, like at 9:30 in the morning, 3 o'clock, we're trading. We're just making call outs. We're not teaching there. You know what I mean? Traders Talk, this is really the outlet where we could address questions and teach a bit. But coming up in 2 weeks, we're going to be resuming our actual classes, the phase 1 class, phase 2 class, and then phase 3 with myself and Fausto. So, just in the morning yesterday, basically, we were looking at Mara again. This student used to trade the stock from time to time, but haven't for a while. Um, they think that they will revisit it again. They did sell some puts on DraftKings, which was called out last week, has earnings in 2 days. I'm definitely looking forward to that myself, by the way. All of our students here, DKNG earnings Thursday after the close. So Friday morning, we'll be trading the reaction off of it. We don't really, jump into trades pre-earnings and hold on. Teach their own on that, but that is not what we do here. We'll trade the reaction off of the earnings. That's where we did really well, even just last week, beginning of this week, on a stock like ARM. Broke all-time highs off the earnings report. But folks, there was a lot more meat to take off the bone over time here on this ARM. So I just mentioned that just on the side. We trade the reaction off of these earnings. Um, but from this student that had emailed me, they had been burned enough times trading into earnings. There we go, right? So, um, you just never know how the market is going to react, even if the earnings are good. Absolutely. I full force agree with that. Absolutely. To each their own, really, with that at the end of the day. If you want to, debate that with me, hey, if you find great success with the strategy you're using pre-earnings, teach their own. But otherwise, I agree with my student that emailed me right there. Even if the earnings are good, you might not get the reaction that you want. Actually, on the flip side of that, how about this? Goes to show how strong of a stock market that we are in. AMD ended up lowering guidance. Remember, they lowered guidance 2 weeks ago, and they chopped around a little bit after, I guess, but they made initially a hell of a recovery. So it goes to show that even off lowering guidance, that threw us for a loop. There we go. The student right away saying, I'm working on finishing up the actual, there we go, the phase 2 classes this week. Love that. The classes are really helping me to watch the price action and support resistance levels more carefully. Perfect. I feel I need a better handle on using stops before I could take the plunge into day trading equities. So I'm going to go further into the email that this student had sent. One thing to just mention to everyone here, though. trading options is much more volatile than trading stocks. So that's where we say we'd rather you shift your focus to stocks first because you're dealing with less volatility, at least compared to the premium prices. I mean, certainly in terms of swing trading, that's even more so. But let's say, just for instance, if you're, day trading the option side of things, even if you have the expiration date set for next Friday, not this Friday, right place, wrong time, you're going to take a larger net loss percentage wise than you would trading the equity, right? I think that we all know that. So options is definitely more volatile than trading stocks, like altogether. We would rather you definitely have a good focus on using level 3 and even level 4, the book map, that is, for equities. And once you have a pretty good firm grip for that, then you could definitely focus more on the option side from that point. Uh, Basically, what this student is asking about is more so in relation to setting stops with swing trading options, right? Well, that makes it even more difficult because you're working with gaps, up or down, either way. Let's just say hypothetically, if we were against the market for the last several months, if we were trying to, sell calls or buy puts, either way, expecting a bearish move down, and we keep seeing not just a move up, but gap ups higher on a lot of these mornings. So, in terms of how do we set stops when it comes to swing trading options, well, it's just simply put a lot more difficult because you are working with these gaps. Like, just, this is a very silly one because it's easy to say looking at this graph, but what happens here if you're just buying calls, just, whether it be on Nvidia, Tesla, AMD, the SPY all together here, and then the next morning, not only does it tank, but you start off just simply on a gap down, on a gap lower. So there's not much strategic advice I could really give for you to counteract those gaps, right? And that's a difference maker when it comes to at least making a decent trade, or at least being break even, compared to opening up instantly down and then perhaps even much lower right away after. I don't like giving non-answers. I don't like giving a non-informative answer, but that's just simply where it's just a lot more difficult to give you the answer I'd want to give you when it comes to this. Now, when it comes to day trading options, that I can give you the answer for, but that's where it's even uh, a little bit more unbridled, I guess that's the way we could phrase it, compared to trading stocks and setting stops for the equity. Because, hey, my strategy for trading options, day trading options, namely, is based off of the levels that we're focused on here for the equity, right? So even like just, shoot from the hip. I took a short on CLSK this morning from this white line. Thankfully, it was a home run. It was a great trade. You could have bought puts there at least around that area by the time CLSK made that over and under move, but you would likely have to buy puts probably for what, like $16 strike price, or maybe if you want to go out of the money, you do 15.50. Right place, wrong time, you're going to be taking a bit of a licking there, right? So with setting stops on options with day trading them, best advice I can give is still making sure that you're basing it off of the equity levels that you're using. But otherwise, if you have an expiration date that is much closer than further away, you're likely going to get hurt a little bit more with these like stops. Death by 1,000 paper cuts, basically. I learned from that, really. So trading stocks like AMD, trading stocks like Coinbase, I'll trade the options of still. But now that I'm trading, now that when I do trade them, I'm setting the expiration date like 3 weeks out, a month out now, even, because I learned it's like, geez, I'm setting the stop and I feel like I'm doing a good job with setting the stop. But because of how close the expiration date may be, even if it's 3, 4 days out, it's like, all right, shoot, like there's probably a little less volatility, at least if you're pushing the expiration out a week or two from there. All right, so let's see if go through any further emails here, folks, just to see if I had missed out on any otherwise. Keep in mind, again, we do this workshop each and every Tuesday morning right here in this live trading room and on YouTube at Cyber Trading U is the handle. I think that just about may wrap it up for right now, just to kind of just see what other stocks that we got here before we finish, just to see what we could work with heading into this afternoon. Certainly now CLSK holding really under 16, whole number there. The combination of these two lines or levels create resistance. So, I took the short in the morning session. I'm not really too bearish on the crypto stocks. It's kind of just based off of how much they had moved up from the last couple of days. Maybe you can get a clean entry, but how far they'll look to pull back, I don't have the answer there. Bitcoin flirting with 50,000, pulled back with the CPI report this morning. So that's where we had a little drop off earlier today. And after the open, we hit resistance and we pulled back. Are we going to drop down to $12 on CLSK? I do not have that answer. And honestly, I'm not trying to find that answer out because I'm a lot more bullish on these crypto stocks than bearish. So there's a time and a place to look for a short opportunity, but I'm a lot more so looking for that bounce over time. So just that's something to think about there. As we come on, Jesus Christ, look at these trades. When you see a stock with these gaps on the intraday chart, that is disgusting. I don't want to be a part of that whatsoever, Mark. You know that. We actually just left off BGLC as it was kind of looking like this, right? So it just goes to show these small cap, low float stocks, it's flavor of the day. It's like flavor for an hour or two, and then that's pretty much it. I mean, even here, maybe there is a chance to see more, but if it's not going to give it to you, if it gets, I mean, this is a bad down halt, Mark. This is a bad gap down here afterwards. So it reopened up from an up halt. It got halted again to the downside on this candle. So that's game over for the most part. Like, look what happened the last time that happened. But this is even bigger, even larger of a gap down. That's crazy. So, yeah, BGLC is toast. DBGI, that was toast from the morning. We call that out freaking perfectly off that fib extension level. I'm not trying to risk it again. The spread's too big. Let's see if we can keep going down our scans here. Keep in mind as well, actually, two big events happening this week, folks. We have our introductory to trading webinar lined up tomorrow. And then on top of that, actually, Fausto will be presenting on Benzinga's platform and webinar series on Thursday. So he's going to be demonstrating the scanners here, the market movers section. This is my scanner that I use. So I'm just looking at this column, seeing if there's anything making a pop. Up the BTAI trying to make a move again. Okay. So we had this from before. And actually, I started this off basically by showing BTAI as we started Traders Talk here with the move off of the big print level that we caught at 9 o'clock this morning. This could be a nice trade to look at coming up. So 9 o'clock this morning, big 85,000 share block print got filled at $2.25. Right? So with that key level to work off of, it took a long time for this to materialize because after the run up, well, it came crashing back down. You would think that this would be support at first. Well, it touched it, but on the next touch, it just sliced right under that thing, right? Hot knife through butter, knife through hot butter, however you phrase it, right? But that's where you say otherwise. Support became resistance. And then afterwards, well, hey, the more times that it ends up poking its head, knocking its head on that resistance line, then from there you're expecting that larger, more reactionary move. So it ended up taking a little bit, a couple of tests. It broke it here and moved off of it. When a stock breaks above resistance and it runs off of it, the hope at least is to see resistance become support. And from there, well, hey, it broke under then over, right? Under then over. Then from there, it ended up making the better move. So with all of the green, with all of the proverbial buying that we had off of that price, let's see this try and make a much larger move here soon. All right, really briefly, folks, we're going to jump off Traders Talk for right now. I had an email come in from 3 minutes ago. I'm going to get back to that email later on today. I have a few different coaching calls I got to jump on to coming up right now. And again, for all of our new gold students of CTU, a couple of things. We'll be restarting our curriculum again going into the next 2 weeks. All of the recordings are right there on the student portal, right on our website. So please make sure that you're caught up with the most recent set of classes that we've just conducted. But otherwise, though, as a new gold student, you have one-on-one coaching time with myself that we always look to schedule just within the first 2, 3, 4 weeks of your enrollment. So I've been speaking with a lot of new students just over the last couple, but actually a few of us here that I know are watching us right now in Traders Talk. Please get in touch with your education advisor. They are the middle man or middle woman between you and myself, you and Fausto, and they are able to get you on my calendar. They're able to schedule you and get you on my coaching calendar for the next week or so. So, with that said, folks, hey, we'll be back live this afternoon, right at 2:30 p.m. Eastern. If you're on social media, Facebook Live, LinkedIn, Twitter, hey, for any of our students there, we got Irving S. and actually Vic joining us there on YouTube. A couple of our students in CTU. Join the trading room, gents. And then for anyone else, hey, if you don't have access to our trading room, just scan that QR code just on the top left of the stream. Get your week-long access to a trial with myself, Fausto, and all of our fellow traders there right now. All right. But hey, I'll be back on the mic just at 2:30 p.m. Eastern for the afternoon meeting. Talk to you all soon. Take care.